securities. So will the plan work? Let's bring in Peter Schiff. He is president of Euro Pacific Capital back in August 2006. He told Michelle Crusoe Cabrera that we were headed for a recession. Let's listen to that call.
Why do you think that a recession is coming? Just how bad is it going to be?
I think it's going to be pretty bad, and whether it starts in 07 or 8, I think, is immaterial. And I also think it's going to last not just for quarters, but for years. See, the basic problem with the U.S. economy is we have too much consumption and borrowing and not enough production and savings.
Okay, Peter is with us. We also have Steve Leisman and Bill Seidman along. Peter, so you made the call. What do you think happens now?
Well, unfortunately, the Fed is doing everything that I feared they would do. You know, you can't solve the very substantial structural economic problems underlying our economy by creating inflation. All we're going to do is turn this severe recession into an inflationary depression. That's all the Fed's going to do. You know, all they have is a printing press. It doesn't create wealth. It interferes. As painful as this recession is, we need to let it run its course because it's addressing those imbalances. The Fed is preventing that from happening. You know, look, we're getting a taste of what's to come in the foreign exchange market. Look at what's happened to the dollar in the last 2 days.
Bill, I too am terrified of inflation at this point. I mean, it's not here now. It's coming at some point. What do you think?
I think he's exactly right. You simply can't print money and expect that you won't have inflation. They're printing money and more every day. So we're going to feel better while that money is helping us out. It's like a shot of dope. Boy, when it wears out, then you really have the problem.
That's the last thing we need is a shot of dope. Also, printing money is inflation. We have inflation right now. The result of inflation is that prices rise, and they're going to go through the roof. You know, what the Fed might do is succeed in stopping the fall in asset prices, but only in a nominal sense. In real terms, what the Fed is doing is going to destroy the real value of our assets even more. Because even though stock prices might not fall, the cost of living is going to go through the roof.
So, Steve Leisman, okay, I essentially agree with Peter's position to some degree. What is the Fed response to sacrificing the dollar and risking a big rise of inflation? What's their response?
The Fed's response is the other side of this coin that nobody brings up, which is deflation. They are concerned about deflation. They're concerned about declining prices, which would make servicing the debts that are out there much, much more difficult, and digging our way out of this problem much, much more difficult. If you guys are truly terrified about inflation, then Ben Bernanke is doing his job.
No, he's not doing his job, Steve. We need falling prices. That's part of the cure for this. Asset prices were too high. They have to come down. And meanwhile, if you look at the CPI number that came out yesterday...
Asset prices and consumer prices, Peter, are different things.
I know, but consumer prices... But consumer prices aren't falling. Right. It would be good if they were.
They're not falling yet, but the rate of inflation
No, they're not. They're rising. They were up 0.4%.
The rate of inflation, that's the headline number. You take out the surge we had in gasoline prices on the core level, and the rate is down. It's still positive.
You're looking in the rearview mirror. You're looking in the rearview mirror. When the
I'm sorry, Peter, I lack the foresight that you have to look ahead into the future.
Yeah,
well, I know you need to look ahead.
How do we know that the near-term pain of not doing this would be worse than the long-term pain of actually doing it? The long-term pain of the inflation.
Well, you do by looking at Japan, Melissa. You know that they went through a decade where they had a deflationary problem. They didn't get the bad assets off their books, which is something they're trying to do through separate programs. And they sat there for 10 years and nothing happened to the economy. This is what Peter Schiff wishes on the U.S. economy.
Steve, that's not true. You don't understand what happened in Japan. First of all, the Japanese didn't do nothing. They interfered repeatedly. That's why it took so long to address the problems. But we're not Japan. Japan had a high savings rate. They had a good industry. They had huge trade surpluses. We're broke. Our economy is a mess. We are not going to have the experience of Japan. We're going to have something much worse. You know,
can we get Bill back?
Yeah, Bill Seidman, you're nodding your head, and you've indicated that you agree essentially about the dollar decline and the inflation threat. Now, the Fed's intent, Bill, is to go after the mortgage problem by getting those Treasury rates down and pulling the mortgage rates down. The other side of the coin is the money creation that Peter Schiff refers to. So, Bill, what should they have done instead? What would you have recommended instead?
Well, first let me say that I spent a lot of time in Japan during their problems. And as been pointed out, they are a very different country than we are. They had huge savings, and therefore I wouldn't use Japan as an example. Now, what can they do? The Fed, everything depends on Bernanke's promise that when the time comes, He'll absorb all these new funds that he's got. He'll pull them back into the Treasury
At the perfect moment.
Yeah, they're proud.
You know,
they're
Lee Hoskins,
Can I address
that? Hang on a second, Peter.
Lee Hoskins agreed with me last night on your show.
No, but Lee Hoskins, former head of the Cleveland Fed, made an interesting point. Put the treasuries aside. The fact that the Fed is going to buy so many mortgage-backed securities and other asset-backed securities adds politics into it. The minute the Fed goes the other way and extinguishes those purchases, then you risk losing support for these key political areas, especially housing. So what Hoskins is saying, Bill Seidman, is politics, the Fed can't create an exit strategy because they're not using ordinary plain vanilla treasuries.
And the problem
therefore, the inflation threat that Schiff is talking about is going to be continuous.
And you know what, Larry, the problem is we're not going to be able to raise rates sufficiently because we're going to have a bigger bubble by then. But what happens right now, what Bernanke has just issued is a giant sell signal to the rest of the world to sell their treasuries to the Fed. Because when the Fed prints money to buy treasuries, they make treasuries less valuable because they destroy the value of the dollars that the treasuries promised to pay.
Why
so
is
there's
it
going to be a
nobody,
stampede.
Why is it that nobody
But you're going to do that anyway, Peter, by issuing a lot of treasuries
prior
to begin with.
administration.
All right.
Neither the Bush administration nor apparently the Obama administration cares about the stability and value of the dollar, Peter Schiff.
Well, they're
Why
going
the
to
heck
care
is
because
that?
this is going to be a
Last word.
currency crisis. That's what's coming.
Yeah, I
and
fear
what
you're
we've
right.
experienced
I
so
fear
far
you're
is
right.
nothing
Peter,
compared to what we're going to go through.
Peter, this is where you have been wrong. You predicted a
Well, no, I
depression
haven't been wrong.
on a
You
current
telling me I've
account
been
crisis.
wrong?
It never happened. We have not had trouble financing our
Steve,
debt overseas.
Steve,
At all.
you're
dollar
not going to
has
sit
not-
there and tell me that I'm the one that's got
you
this
called
wrong.
a recession, Peter, for the exact wrong reasons.
All right, we
Never
got to go.
happened.
We got to go.
Steve, you
Thanks,
really,
guys.
really can't be saying that.
I just did.
He did.
Go back and play the tapes of my appearances for the
You
past
were
few years.
wrong. You did not have
Now
the
it's
I've been
time.
wrong.
Your call.
I've been wrong. What are you kidding me?
You were on for the wrong reason.
Look,
No,
the dollar-
no, Steve, you
Will
are
the
still
Fed's
so clueless.
$1.2 trillion.
We got that through.
You want to scroll up?
We got
Gamble, pay off. Go to CNBC.